So, hello everyone, and welcome back to Nakedly Honest, hosted by myself, Lisa Maysonet from Sotheby's International, and Noah Rosenblatt of UrbanDigs. If you are joining for the first time, welcome. And if you're here again, welcome back. I thought I would start today's Zoom meeting as I start all my team meetings at the office. I saw a post the other day that I want to share. It was positive, and I love sharing positive news. So here goes. Today, since March 16th, there have been no school shootings, traffic is gone, gas is affordable, bills extended, kids are at home with their families, parents are at home taking care of their children. Fast food has been replaced by home-cooked meals, hectic schedules replaced by naps, rest, and relaxation. The air seems cleaner, the world quieter, people are conscious about hygiene and health. And money doesn't seem to make the world go around anymore. Doctors, nurses, teachers are being praised and recognized instead of athletes and celebrities. And we now have the time finally to stop and smell the roses. So Noah, as we look forward to a recovery, or as I'm calling it, the day after, like a bad rain, like a deadly hurricane, you assess the damage, you handle and deal with reality, you make a plan, and you move forward. So based on the numbers, what can you tell us about what is happening now, and round up the past 30, 60 days, and based on current contracts, what would the numbers say coming out of this deadly storm called COVID-19? So I've prepared a few questions for you. Basically, the first question is, what deals are happening now, and what is the nature of these deals? Are you seeing concessions? Are you seeing discounts? And if so, how much?
So, all right. So there's a lot of stuff there. Let me try to go through it one by one, and if I miss anything, please let me know. First off, I don't have the best answer for you guys in terms of where prices are or where Corona deals are happening right now. The answer is nobody does. Okay. There is no market right now. The market, I mean, there is a market, but it's a highly dislocated market. It's a very thin market, and it's unique to the a couple of things. It's unique to obviously the pricing of the property, but it's also unique to what type of seller that you're dealing with, right? Is that seller one of those sellers that has to sell? Are they forced to liquidate? Do they have a margin call? All right. Or is it one of those sellers that has a property from 30 years ago and is just, they're ready to get out of it and they don't care what kind of discount they might hit? Those two seller characteristics, those two type sellers are going to be very active in today's market. And the problem is that where's the bid? And where's the bid when you're dealing with an $800,000 one bedroom co-op versus where's the bid when it's a 3-bedroom luxury condo in a new development are two very, very, very different answers, right? So, if you ask me where deals are at, and I'm just going to share my screen so I can show you guys some stuff over here. Give me a second, please. Okay. If I go back in time and I go to March 20th, when the no showings order was put into play, okay, and I'm going to do it to today, April 30th, and I look at contract activity. So I'm just going to go to contract signed over here. So this is going to pull me all deals that were actually signed into contract during that time. It's only 330 deals, right? So usually that number is closer to 1,400, considering the time of year that we're at. So deal volume is down a good 70, 80%, whatever that number is. And we don't have a lot of liquidity. So now you got to ask yourself, okay, 330 deals, right? March 20th to April 30th. March 20th was the no showings order, right? Lisa, you know as well as I that when you have an offer accepted, there is a notable lag between when that offer and that deal was stricken, or whatever what word you want to use, the meeting of the minds is what we like to say, and when that contract is fully executed and you go to RLS and you change your listing, the contract signed, right? There's at least a couple of weeks, and you guys all know that on this call. So when we look at these contracts, 330, you got to take 3 weeks out of it and figure out, oh, that deal was probably struck 3 weeks prior, maybe even 4 weeks prior. So a lot of these deals are residual deals, deals where the buyer actually saw the property, okay? Now, if you want to talk about true Corona deals, potentially sight unseen deals, you may have to go closer to, like, I don't know, in the last 2 weeks, maybe April 16th to April 30th, and look at contracts signed in that period. And this may be more indicative. This may be more indicative, not 100%, of course, but it might be 80 or 90% actual sight unseen deals. I mean, we don't know for sure. I'd have to go through every single one of them. But the residual deals in the last 2 weeks of contract signs is probably fading. So if you're asking me where the market is, right, you got to call. This is that time that you got to call these people up and find out where they're at. Because, I mean, this $4.38 million deal right here, I wouldn't be surprised if they hit a bid down 15, 20% in that sector, especially if that seller had to sell. We don't know the situations under it. This $985,000 listing, maybe he had to hit a bid down 10%. You know, if I had to give you a range based on anecdotal, and I'm talking to a lot of attorneys, I'm talking to a lot of agents. So when I say anecdotal, it's mostly from these kind of guys. And you also have to assume that these guys knew where we were before and are giving me an accurate assessment in terms of how much we're down in Corona. The ranges are somewhere between 5% down and 30% down, with extremes on both sides. And the 5% and 10%ers are usually under $1 million market, and the 20 and 30%ers are usually in the 5 million, 6 million, and super luxury market, as you would expect, much more illiquid. Okay, so what we're looking for, I think you asked me, is what we're looking for in a rebound, is we're looking for weekly, okay, this is what I do. I go to weekly contract signed information. And we're looking for...
Screen for some reason. Is it me or?
You don't see my screen? Hopefully other people can see my screen. I think it's set properly to screen share, so I'm hoping it's just you. So I think I'm okay. I don't know if there's a chat there and you can see whether or not people are texting, they could see my screen or not. But I'm looking at weekly contract signed, and I'm looking at this number. Okay, we need to see this number come up right now. That's what we're looking for. Okay, I got someone texting me that they can see, so I think it's you, Lisa, so everyone can see. So we're looking for weekly contract signed to go up. We're looking for weekly 1 actives to go up. All right, if I go to 1 week active right over here, this is how I track it. This is the only way to do it, because you had to track it since the beginning. So I've been doing these weekly coronavirus market updates on Fridays. I got to do one tomorrow. That's looking at weekly production. And I picked Friday because it's the end of the week. And I figured, let's just look at what's going on. And when I started doing it, the 1 week active started dropping from 400 to 300 to 200 to under 100. And now we're at about 67. So there's only 67 listings coming on the market, okay, when there should be something like 400 or 500. So what you're looking for in terms of recovery, back in real time. Lisa, you there?
We're setting up, trying to...
I think somebody's got their microphone on. If Hello?
Yeah, can you hear me, Noah?
Yes, I can. There you are.
Okay, great. So how many listings have been taken off? How many new listings have come on?
Right.
And what is the current absorption rate?
Sure. So kind of like 3 different questions, with 2 of them are connected, right? So to get that information, I'm going to go back to my chart room. Okay, I'm going to go to my chart room over here, and that's a good point that you bring up, because we're in a declining inventory market right now. We have demand declining, but we have inventory declining, and the inventory is declining because a lot of stuff is not coming on. So to do that, I am looking at my monthly new supply number, which basically tells you every single month going back, I believe, 7 or 8 years. It goes like 9 years, 2011. And it tells you each month how much inventory comes on so that you have a frame of reference. And I like to go and click on my 3-year button on this. So it's a little cleaner. Okay. And I could see that in March. Let's go to last month first. In March, we usually have 1,800 listings. And again, I've been talking about this a lot, but it's important. March, we usually get 1,800 listings. We had 924. That was a partial exposure month. It wasn't a full exposure. This is our first full exposure month. So tomorrow, we're going to be publishing that bar because tomorrow's May 1st, and we'll publish April's bar. Okay? We're supposed to see around 2,000. That's what's typical if we look at the last 3 years. And if we look at next month, it's kind of like 1,900 is what we're typically seeing. So for the next 2 months, we're supposed to see around 1,900, 2,000 listings. So if I go to my search over here and I do a 1 month active, that could give me a pretty good estimation of how many listings are coming on the market this month. And that's 293. So if you think about it, Lisa, if we're supposed to get 2,000 and we're at 293, you're down substantially in terms of new listing inventory coming on the market. And where are we going to be in May? So the question really becomes is like, what do we look like when we get out of this? And there's 2 trains of thought on inventory. One train of thought, Lisa, is it's going to be a light switch, and that the restrictions are going to ease, and all those off markets, all those listings that came off market, which I didn't touch on yet, but all those listings that came off market are going to come right back on. And I kind of agree with that. There was about 500 or 600 that came off, and they're probably going to come on, maybe a little more. But what about all those new listings that didn't come on? Are those guys going to come on? Is it going to be 3,000 listings in the first 4 weeks when we come back on? That's the question, to make up for the missed ones that we had. And I don't know. What's that?
Yeah, I said that would be pretty scary.
Well, again, you don't know what's going to happen. It's possible, and it may not be scary because, again, this is an unprecedented kind of event. It's a shock to the system, and we probably should have had around 2,500 listings come on the market between March, April, and May when we get through with it at the end of the day. I know it's a little premature, but if you think about all the lost potential inventory that would come on based on these averages, it's probably up there in the 2,000 to 3,000s. And so the question now becomes is when we get out of this and we're allowed to show technically and legally when those restrictions ease, what happens? And the second train of thought is, no, we're not going to come back 3,000 at one time. It's not going to be a light switch. It's going to take months. It may even take a year to kind of gradually get people back to where they are. And I kind of fit into that camp. I do think there's pent-up demand. I do think you're going to have pent-up demand. I think it's just going to be slow to start. And then at some point, I don't know when, but at some point, you're going to start to see activity really ramp up. And that's where you guys really need to be on your game because you're going to see it. And just a final point over here, you're going to see it in this contract sign data. So you go contract sign weekly. And the reason I do this is for a frame of reference. I wanted to see how bad the fall was. I wanted to see, all right, how bad are we going down? Now that we're down and we're starting to slow down and it's normalizing a little bit, I want to see the uptick. So contract signed in the last week is 40. So I want to see this start to go to 50 and 60 and 70. And every day this updates based on RLS, based on the revenue listing service and listings that come in from RLS. So it's direct from all you guys taking listings and putting contract signs in, right? That's what you...
Is there a way, or do you have a chart? And if you don't, maybe you can make it because you always make everything for me. To see on each listing, well, I think you do have it, what percentage off from the initial asking price, right?
Yes,
So
I do.
Average of all the contracts signed, so to speak, so we can see like at least some kind of, even if it's fuzzy-ish, some kind of picture as to what kind of discounts we're seeing?
Right. So every listing is going to have that, right? So every sale listing right over here is going to show you right over here on my screen. Lisa, I know you may not see it, but the audience should. Boop, right over here, minus 5.81% from the asking price. And that's the original asking price. We don't go to last ask. I kind of don't like that. I know some statistics go to last ask. And the reason they do that is they have two arguments. Number one, they say that that's where the market was, that the previous ask was not the market, so we don't want to count it. And number two is the data is really messed up in RLS. And we had to fix it all, and we did that so that we can go back to the original listing price in an accurate way. We also have charts, median listing discount, right over here. And this is one of my favorite charts to look at, with the caveat that sales data is lagging. Okay, so again, we always have to consider, that's why I built this UrbanDigs system. I built it because I wanted to track the market in real time, and I needed something to track days on market and supply and pending sales and contract activity and all that good stuff, and off market. That's all real-time stuff, updates every day. But the sales comes in lagging and is representative of a deal that was signed 4 to 6 months prior. So when you look at this number, and we look at this absorption rate number for January, and you quietly ask yourself, Noah, why do you have January when it's April 30th and tomorrow's May? And my answer is going to be, well, tomorrow I'm going to publish February. All right, every month. We're doing a 2-month delay. So tomorrow I publish February, and I'm skipping March and April. I'm skipping those 2 months. And then on June, I'll publish March. And the reason I do that is because if you have 1,000 closings today, even though we're not in this environment, but if we did, 1,000 closings today, Acris, our beautiful, wonderful city register that gives us our verified sales prices and sales dates and all that good stuff, it's going to take them 3 weeks to 2 months to get me those files. So 50% of them will file in 3 weeks, 60 or 70% will file in 8 weeks, and then you got to wait to 90% will file in 12 weeks, in 2 months. So that's why we wait, because otherwise, if I publish a April bar, a sales bar, it's going to be incomplete. So this is lagging, and basically, one reason I bring that up is let's think for a moment here, right? We are in a very weird place right now. We're in a place where the market was coming back before this hit. You guys may have felt it, right? My market pulse indicator showed it in my chart room, but November, December, January, February was good and was coming back, especially in the luxury market. Deals were getting signed finally. And then this all happened. So we still have January, February, and maybe the beginning of March deals that ultimately closed, or even December, ultimately closed, that is yet to funnel through the sales pipeline, the lagging sales pipeline. I wouldn't be surprised if Q2, those reports on Q2, which is released July, is actually not bad at all. When everyone's be scratching their head saying, what the hell's going on here? What about the Corona market? And my answer is that those Corona trades signed into contract in April, we discussed earlier, that's going to take 4, 5, 6 months to close, just like everything else, and become public record. So I could confidently say, I don't think we're going to see that stuff until September or October, So Q3 is going to
price apartment then. I mean, a seller, wants.
Yeah, I'll get that. Let me get that in a second. Let me talk about this. Let me talk about that absorption rate question that you mentioned before, because I want to just explain what that is. So absorption rate right over here is in months, Lisa. 6.4. Think of it as 6.4 months. Okay. And what it's looking at is looking at the pace of closed sales, which is 896. Okay. In January at a lag. And it's looking at what inventory was at that time in January, because these are two different time periods. Sales is lagging by a few months, but supply is real time as of yesterday. So it's looking at the same, so it puts the time perspective on par, and it's looking at closed sales with inventory and saying, okay, it's going to take 6.4 months to wipe out all of your supply if we continue at this sales pace of 896 a month. That's what that's basically telling you. In short, the market is weakening and deteriorating if it rises, and leverage is going to buyers if it's rising. And if it's falling, the market's strengthening and leverage is going to sellers. So when you look at absorption rate, it's going to be similar to listing discount in the chart. If you look at the trend, where it's going to be lower in the 2013s, 14s, 15s market, which was a much better market. And of course, it started rising during our decline, and it's kind of, I guess it's off its peaks, but this is going to come right back in 4 or 5 months from now, once we get the Corona numbers in.
Okay, so where are you seeing the most activity now? Are there opportunities? And if so, where are they?
I'm not seeing any activity. I'm not seeing any I mean, I'm sorry, it's a bad question, but everything is kind of shut down right now. I mean, deal volume is down 70% or so. There's no liquidity. There's no contracts being signed. Even attorneys are telling me that the majority of their action is renegotiations, and they got, lenders are telling me the majority of their action is refis. Very few. There's only a couple of hundred deals being signed. If you want to find out where the action is, you got to define what you mean by action. If you mean action by like the worst hit market, and I want to focus on like the worst hit market, what I would do is I would go to the chart room that I have here, and you could look at this market pulse number. So right now I'm looking at all Manhattan, right? So it's the entire market, right? But I could use this overview section right here, and I could say, all right, well, show me financial district, right? Whoops, financial district. Watch what that number changes to, 0.15. So now I could tell that the leverage in the financial district is much worse, and it's shifted towards the buy side in a much more favorable way than Manhattan at 0.47. That's what the market pulse number is. It's giving you a relative gauge of supply and demand in that hyper local sector that you're looking at. And every sector is its own market. You know that in Manhattan, every building is its own market, every neighborhood is its own market. If I go to the Upper West Side, okay, let's see where that is. 0.73. That's an outperforming, overperforming market. There's not a lot of supply given how much pending sales there are. So it's a much stronger market. And you can do this to find, again, you got to define what you mean by value. Some people define value by, I'm a contrarian and I want to buy in the hardest hit areas. Okay.
What area would you say have the most activity, most contracts signed?
I don't have a pie chart or a top 10 that just breaks down recent contract signing to show what neighborhoods are doing what. You would have to go to the search tool and do a contract sign search over the last month. Okay, this is what I would do. Okay, contract sign search over the last month. Go search, right? And then here's what I do. I'm going to click Create CMA Report once this all loads. I'm going to click Create CMA Report. Okay, I'm going to load all of these, because it doesn't load all of them at first. I want to load all of them. And then after that loads, it takes a little while because this little thing's going. I'm going to select all of them. Okay. And now you can export to Excel. And the reason I say is Excel is there's going to be a neighborhood field there. You could sort by neighborhood, right? And you could sort by price. And you could sort by whatever other bedrooms counts. So you could export this into Excel and you could start parsing it and angling and see where the action is and see what neighborhoods they're in and see what price ranges they're in. You could do all that through the Excel from this tool. I just didn't do it in preparation for this talk.
Okay, that I think is going to be key because, clarity is power.
Right.
And in managing expectations and communications with buyers and sellers,
right.
They want us to make predictions. Well, we can't make predictions, but we can learn from the numbers because numbers matter. Right?
Well, you asked about price. You had a pricing question stuck on in there, and the answer to pricing question is you can't look at sales anymore. That's the problem. So what you need to do is you need to do a search. Let me just put something in here and show you what you need to do. So let's say I'm doing the Upper East Side. I'm doing, I don't know, up to $1 million. And let's say I want condos. I don't know, I'm just going to see what's there. I have no idea what's there. It's not going to be a lot, right? So what you need to do is you need to put the criteria in the search tool, right? And you need to narrow the filter, starting with active, right? And basically say, all right, here's my active listing. Whether it's on the market or not, you have a target property. So here's my target property. It's a 2-bedroom, 2-bath condo, Upper East Side on the 10th floor, okay? You use all the search fields. If you're on the 10th floor, do a max floor range of 15 or something. You know what I'm saying? Like exclude everything that's not relevant. Like do this kind of analysis and find out what's truly your competition. The question you're trying to answer, Lisa, for this pricing question is if I'm a buyer and I'm going to walk into this target apartment that I'm trying to sell or I'm trying to price, either way, what other apartments right now are active on the market that are competing with that property that I'm also going to consider? That's the question. You have to think about a buyer, right? So if I'm a buyer, what are they looking at? So there's a pool of listings out there in your subsector, right, for lack of a better word. So use the search tool to narrow down. And this is where you don't want 40. This is where you want like 8 or 10 or 15 good ones, right? And you click Create CMA Report. Okay. And what you could do is you could select, all of them, or you could go through this and select whatever you want, and you could toggle through the statuses. And the most important things, Lisa, are going to be your active and your in contract. Okay. Your active and your in contract, because your closed are meaningless. These closed listings right now, this is a very important point. These closed listings right now are sales that have nothing to do with the dislocated Corona market we find ourselves in today. And as far as current pricing, I normally would not do this. I would tell you to look at closed. That's actually your verify point. That's what you look at. Active and in contract is not closed. So those are secondary and tertiary. Closed is primary. Now I'm switching it all around and saying closed is not even part of it. Active is primary. Actually, in contract is primary and active is secondary, quite frankly. You're in contract. Let me just toggle here. These are your gold. These are your gold. Maybe the 415 shouldn't be there. You could take it out, but this is when you make phone calls, Lisa, and you find out 1 or 2 properties that are most similar that are in contract, and you find out, could you give me any idea of where the deal is at? Is it 5%, 10%, 15%? They're not going to give you a number unless you know them, the broker, but maybe you can get a percentage, and that's how you got to figure out where the market is. There's no other way.
Right. I know this is like very, very different than, past global events, 9/11 and some other events that affected us. Is there any way to get clarity from those situations to maybe prepare for the day after, insofar as the market and numbers? Did we see any pattern after that? Did we see a 10% drop?
Well, so I lived through both, and I was following the real estate market obsessively through both, even in 9/11 when I was a trader and I wasn't in real estate yet. Because real estate and trading are both 2 of the things I like to follow. And I'll tell you, after 9/11, and again, I signed a contract in October of 2001. So I signed a contract right after 9/11. So that's why I kind of know exactly what it was like, because I lived it. It took a year. And again, I wasn't an agent. I was a trader back then. We didn't have tools like UrbanDigs back then to actually know what was going on. There was no way of tracking things back then. It was just what was on the market. There wasn't even high-level averages. You had to do all that on your own. But it took about a year. We had a dislocation. We had an event. I mean, the market was normal. Then we had a shocking, tragic event in 9/11. And then everything just straight down, reset, 15, 20% lower was the median. And I would say some outliers, some classic sixes were trading down 25, 30% in early 2009. I'm sorry. That's the credit crisis. I'll get to that in a second. Right after 9/11, right? A couple things traded really, really, really hard. And then about a year later, it came back. But the window right after 9/11 was very small. It was only a couple of months. And same thing with the credit crisis. It was only a couple months. The credit crisis in 2009 saw 30% discounts in like February, March 2009. Oh, forget about it. If you were selling a classic 6 back then, you were hitting the bid down 25, 30%. And I remember deals like that because I was getting into arguments with people that it was not down 30% and I was wrong. Flat out wrong, and it was. And I found out later it was, but that window was very, very small. So go back to 9/11. It took a year to kind of like recover from the full drastic down. But it was like one of those situations where we fell, and then it was like a rubber band kind of snap back halfway, and then the remaining 9-10 months of the year, it like gradually reflated to back where it was before. The credit crisis was a little different. The credit crisis, I mean, you got a good deal in 2009 for 6 months, 7 months. If you bought in July of 2009, you still got a great deal. If you bought in April 2010, you probably still got a good deal. Like, it didn't recover in a year. The credit crisis took a few more years, but the most severe dislocation in the credit crisis was early 2009 for a period of about 3 or 4 months. I would say January, February, March, and April of 2009 probably marked the bottom. And if you bought at that bottom, you also had a rubber band snapback probably around May, June, July, August 2009, but you were still dislocated and down. You just weren't seeing those steep discounts. This is similar. This is similar to that, in the sense that I'm hearing some deals down 30%.
I bet you we're going to see, well, I shouldn't say I bet you, but I wouldn't be surprised if it's a combination of both.
It's a mad child of both.
Discount and a slower rebound pace.
What's different is the fact that this is a global shutdown of the economy. We've never experienced this before. There's no playbook for anything like this. It's not like it was a one event isolated in one location. This is a deep thing that's affecting human behavior. So we all got to find out what we're going to be like at the end of this when we come out of this. All of us are changed, whether we know it or not. All of us are changed. And what's also different from this is the global stimulus. There's 13 trillion in global stimulus, 6+ trillion in the States, in our country, and that's growing. And you're going to have volatility and stuff like that, but you do have a floor that the Fed is trying to put underneath all this stuff and ultimately to reflate out of it. So you guys got to position yourselves. There will be buyers that are going to look to real estate as a hedge against any inflationary effect from everything going on over the next couple of years. I mean, that stuff takes years. Think to 2009. There was about $1 trillion in 2009. And it took 8 months, a course of 8 months for them to figure out what was going on. They didn't know what they were dealing with. They never dealt with a credit event before. They had Lehman Brothers.
But we didn't have, 900 or so listings come off the market either. So that's
back then in 2009. Oh, we had a ton of listings come off the market back then. We just don't have data right now to track it. My listing data doesn't even go back that far. I think I go back to 2011. But I remember a lot of listings came off the market in 2009. And the same thing happens in every cycle crisis. Sellers take their listings off the market when they can't get their bid. It's as simple as that. If they think they're not going to get their bid, they take their listing off the market. They don't want to sell in a market that is not going to produce what they think they're looking to sell at. So when you look at the sellers today, and that's why inventory is down so much, you're really seeing, all right, now these are the sellers that are looking to sell, or they just want to list and bide their time. So out of the 5,068 sellers that are out there today, right, this is what you got to think about, because this is what buyers are thinking of. Number one, that's down, Lisa. So inventory is down. Like, buyers had everything coming into this. They had inventory on their side, negotiations, and they had discounts. Now they have negotiations, discounts, but they don't have nearly as much inventory. Way, way, way less. And not only that, but of that inventory, and I think I talked about this last time, of the 5,000 or so sellers, how many of those sellers are really willing to hit that bid down 25% or 20%? So you got these buyers that are bidding accordingly based on sight unseen and all this unprecedented uncertainty and et cetera, et cetera. They're trying to price in where they think the market is. And their bid drops much lower. And the sellers, meanwhile, are sitting there saying, well, which ones want to hit the bid? And the only ones that are hitting the bid are the 100 or so that we saw in the data. When we looked at the last 2 weeks contract signed, was 100. When we looked at March 20th, it was 328, when it's usually 1,400 plus. So a lot of sellers are listing, but they're not considering hitting a bid down 20 or 25%. So they're biding their time. And that's what's got this market dislocated and at a standstill. And buyers are saying, you're wrong. And sellers are saying, no, you're wrong. I got time. I'll just wait. There's an inflationary wave behind all this. I'll take a bid down 10%, not down 20%. And that's what's going on.
Wow. How do we mediate this?
It's tough. It's honestly through data, through transparency. The only way to mediate this is to get both buyers and sellers to understand. And that's why I'm doing these talks. Like the narrative with buyers, you got to get through to your buyers. Number one, you do not have leverage in terms of inventory. You're not going to see as many listings on the market that you normally would be. No way. If there would have been 10 listings that you would consider, maybe there's 5 now. And of those 5, maybe only one of them is really going to be in a dire straits, forced seller, or in a situation where they're going to entertain a bid down 20, 25%. So you got a lot of buyers out there that are putting these bids in that are going unentertained. And I'm talking to brokers all the time. They say, yeah, we're getting lowball bids on all of our bids, which is not entertaining them. And that's like kind of a common thing. It's hard to bridge it until you start seeing activity come back. and then you show your clients and activities come back and you keep them posted. Like, I kept you posted on the downfall. I kept you posted when we were bottoming. And now I'm keeping you posted on the U-shaped recovery when it's coming back, so that your buyer could take advantage of the price dislocations that exist. I mean, because you got to keep in mind, if this market in real time starts to improve, and the stock market improves, and the market comes back, and listings come back on, and deals start getting signed, and you find yourself in July and August, and the market's starting to get active again, and then guess what? All of the trades from March and April start to clear, and we see the headlines, right? This is what we have to look forward to as brokers. So either it's going to be a shock to the system in Q3 when those headlines come out and say Manhattan plunged 25, 30%, whatever it's going to be, either Q3 or Q4. I don't know which one's going to show it. We got to make sure our buyers don't think, well, all right, the market at this time right now, again, this is 5 months from now, is down 25, 30%. And the answer is no, it was in March and April when nobody wanted to bid, when there was only 200 deals. Those guys got the down 25, 30%. They're rewarded for participating in a highly dislocated and liquid market.
That's why it's so important. Numbers matter. It's so important for us to stay on top of these numbers, for us to continue to educate ourselves, because we are the ones who are going to be advising these buyers and sellers and trying to make deals. And, we really, really need, like you said, transparency. And, what could be 2 weeks ago could be very different 2 weeks later. So it's very, very important if we want to stay in this business and we want to be professional, we have to know our numbers.
And think about it, Lisa. If you were a buyer, okay, and you're a broker, and you ask the broker what's going on with the market in this crisis, and that broker says, I really don't know. There's nothing really on it. I can't tell. But then you got another broker that's showing them all this breakdown of the listings and the in contracts and the off markets and what happened at the worst of fear in March and what happened as we got better as now it's getting a little better. And then you start showing me it reversing and starting to show an uptick in activity and reversing going the other way. I'm going to feel a little more confident. I'm going to feel a little more confident and I'm going to feel a little more certain. And the whole uncertainty cloud passed a little bit. Maybe not fully, but a little bit. And that's what you need to do for a client to make a decision.
And it's really important in today's market. I mean, I've lived through quite a few markets myself as a salesperson, right? And I mean, there was a time when, marketing was the thing. Pretty pictures, they're great because you can't get into an apartment, but that's not going to cause a buyer or a seller to make a trade, to do a transaction.
Right. Especially now. And you just got to put yourself in their shoes. I mean, a lot of people don't have the ability to put themselves in the buyer's shoes. Think about what they're being asked to do. They're being asked to buy $1 million property without seeing it. And maybe or maybe not, the seller is going to price in all that uncertainty. They may have to bid up so that the market's only down 5 or 10%. And they're like, I'm not really willing. I think the market's down more than that. And I'm going to wait it out. And that's what's going on. Until they feel more certain and they feel like the market's, all right, now I'll do it down 10% because I feel a little better. So that's what kind of lies on the other side. So you want to kind of prepare for it so that you're positioned. And when the rebound comes, you take advantage of it. Sorry.
Yeah. Just in listening to you, I'm thinking that the first few months, it's going to be a challenge until everybody understands that, okay, there's been a little correction, maybe not as much as the buyer wanted, and maybe a little more than the seller wanted, but it has to start to just, because there's too much, the uncertainty sort of has to settle. I guess that's what I'm trying to
and I mean, it's going to take 4 or 5 months for the price discovery to reveal itself. So if you think about that timeline, we're going to have to go through that. And appraisers, think about appraisers. Appraisers are using sales as comps. They don't have this price discovery yet. And every bank and lender is telling you that at some point in the next few months, they might see those trades and they might deem us a declining market because they see those trades. And now appraisals might get affected. So there tends to be a lag, like we're early, there tends to be a lag before all of this kind of hits and has a secondary effect on the cycle. But Manhattan tends to operate in its own little vacuum. Manhattan tends to do its own little thing. And even if the outside world is doing something, one thing, Manhattan could do something else. So I would not be surprised to see Manhattan come back and be the first to come back and come back quickly. It always has. It's just going to be a little painful in the meantime. And like you said, look, they may ease the restrictions on, was it May 15th or May 20th? What's that date? Do you know?
Well, I mean, originally it was May 15th, but.
Okay. So, I mean, they may lift that, Lisa. But, you know, some brokers may not feel comfortable holding open houses. Right? I mean, like how you feel about it might be different than how somebody else feels about it. And that's why I think it's going to be a phased, staged recovery. Buildings may not allow open houses. They might have their own policies. So
Sellers might have kids that they don't, want people.
Again, and these are the things that, these are the nobody can kind of account for all these tangibles and what we're going to encounter, but we're going to have to encounter a different world with a different level of recovery than what we're thinking about. And I'd rather manage expectations conservatively and say that I think we're going to be a phased, staged, slow-paced recovery. I think people just want to get this over with. They don't want to risk a second wave. That's the last thing they want. Last thing they want to do is go into lockdown again in the fall. You know what I'm saying? We want to get out of this and get out of it for good. So it might take a few months, and you got to expect consumers. I mean, our consumers, it might take them a little while just to feel comfortable again to do something. So,
My team putting together a safety showing protocol checklist in preparation, right? This whole thing about is this whole Zoom meeting today, the premises was about preparing for the day after. So I think that we'll probably see early on maybe investors wanting to take advantage of a market. But then the other thing I think as brokers, as buyers, as sellers, I think it's really in the beginning going to boil down to need. Who needs to buy? Who needs to sell? And then can I make the best deal for myself?
Yeah, and you're right with the
immediate.
You're right with the investors. I mean, I think that's what's kind of populating our market now. If you think of the buyer pool as this like thing that's just contracting and expanding at all times, that buyer pool right now, 80% of it is on the sidelines. Only a small percentages of it's actually participating in today's market, and those are probably the majority of those are your opportunistic investor types. They love this kind of market. This is like what they were looking for, the distressed type of market, and they'll buy something they don't necessarily like to take advantage of the market on a trade. They'll do those kinds of things. So again, we're seeing a marketplace right now that has the majority of our buyer pool pushed aside on the shelf. And you're going to see that come back. You got to look at weekly contracts signed and you'll see it start to come back. And that's your sign. Hey, if I'm a buyer and you want to take advantage of the real-time dislocation, you can't wait. You can't wait till the closings come in. You got to do it now when the fear level's higher. And Lisa, let me just say one thing. I look at this whole period, like if you think back to 2009, right? Because it's the closest thing we got in terms of like the severity of the hit so far. 2009 took a while. It was very painful. Like it was many, many months, right? And we're in this right now. It's very painful. But 2009, the dislocation window of 2009 was many months. Like let's say it was January, February, March, April, May, June kind of thing. That was the dislocation window. And the peak of it was right in the middle around February and March, right? Was the height of severity of the fear, like the biggest fear levels. So I think we're in the same exact type of situation. That's the only thing I could think of, right? And we're in a dislocation period. And I would argue that we're 6 to 7 weeks into it, right? And I think it's going to be a few more months, until it's going to be 4, 5, 6 months. And we're 6, 7 weeks into it already. So we're kind of there. And I also think that the height of severity within the dislocation period of many months, there's going to be little windows of more fear, of a higher severity fear. And I think March, like mid-March, I think March 15th, March 16th, 17th, 18th, 20th, 20th. If you had an accepted offer for the first time right then, like March 25th kind of thing, and the stock market lows were March 23rd, and the height of fear was much higher back then, I think that the chances of the bid-ask spread, the seller hitting that gap down bid that's much lower, was higher back then in mid-March, end of March, than it is right now and today. When I see today, I see that there's fear and it's bad and we're dislocated, but not nearly as acute as we were about 5 weeks ago. That fear 5 weeks ago was much scarier than the level here today. And that's what's going to happen. We may have another one. We may have another bout of it. We don't know. But that's what's going on. You're in this dislocation period that's going to have these minor windows that are more severe than the majority of the dislocation period until it all ends.
I myself, and I've spoken to brokers, you know, I'm on a Zoom meeting almost every day. And I know that there are buyers there that were negotiating or had offers in that just pulled back right now because they want to wait and see how the dust settles, so to speak, and how much you know, if a discount is there going to be. And these are people who really need to buy. I mean, they've sold, they're in temporary housing, and, you know, so there will be those buyers that, you know, just paused to see what's going to happen. And I think they will become active again as well. God, it's going to be so interesting. But I guess all we can do is, you know, continue to prepare for the day after.
You got to educate yourself. You got to educate your clients. You got to just keep them posted on what's going on. And believe it or not, they will be thankful that you're being honest with them. This is not the time for broker spin. This is the time for broker honesty and broker transparency. And this is the time for using technologies like Zoom, or I use loom.com, Loom, loom.com. It's a screen sharing technology that lets you it's for free, and it lets you just, you know, record messages on your computer and 5 minutes, and then you can get a link to it and send it to a client. This is the time to do all these things to explain to your clients, because at the end of the day, they're craving transparency. I know this because my business is insights related. My business is insights, and I have been so busy. I'm not making more money. I'm making less. I'll tell you that. But I've been so busy in terms of people craving insights, and agents are just dying for it. And it's because their clients need to hear this kind of stuff. So if you keep them posted on what's going on, they'll feel more confident when the market does come back. And that's your play. Your play is not to do 10 deals today. I mean, I know this doesn't sound counterproductive, but your play is not to do 5 deals in May. Your play is to do 15 deals in June when this thing comes back, you know, and take advantage of the pent up demand, hopefully.
So again, in preparing for the day after, I think some words that you use are really important, like insights related, transparency, and as I call our Zoom meetings that we've been having bi-weekly, nakedly honest. We need to know the facts so that we can be advisors to our buyers and sellers who, you know, really are depending on us.
Yeah.
So as we end today's meeting, I can't see if there's any questions here. I apologize. I have a black.
I could take a look. I don't know. Nope, no questions. I don't think we announced it, so whatever.
Okay.
Too bad.
So,
sorry.
In ending today's meeting, I hope that everyone found the information that we contributed today is valuable. And I invite you to join me in contributing in 2 organizations. The first one is Covenant House. They provide food and housing to homeless youth who would otherwise be living on the street. And the last number that I got was about over 3,500 youth sleeping on the streets in New York City. You could imagine they've had an extra influx and can really use our help. And God's Love We Deliver, they provide and deliver food to those in need who could not otherwise feed themselves. So the links are provided in the email. And again, I thank you all for joining, and hope you found this contribution valuable, and please do consider contributing. So thank you all.
I think we have one hand up. Karen has a hand up. I don't know how. Could Karen unmute herself? Or Karen, could you type in the question?
There's no place to type, Noah.
Oh, there you go. We could hear you.
Okay, great. Quick question for you. For those sellers whose listings are about to expire, what is your insight as to getting extensions? How would you present that to a seller now at this time?
Oh, that's I would actually ask your sales manager that kind of question. I don't know the answer to that question. I was talking previously about trying to get agents to get an extension on their listing agreements, existing and new, about 4 weeks ago when this all started, worrying about this. I would imagine that sellers are going to be open to this and reasonable and amenable to this. But I got to be honest with you, you have to talk to your sales manager, who probably has a lot more in the streets experience with other agents dealing with the same situation. And your firm may have a protocol for handling this situation. And I don't have the answer for you. And if I did, I would probably even say, go to your firm, because I don't know if your firm is handling it in one way and another firm looks to handle it in a different way legally with the contract or whatever. So you gotta ask your sales manager or the higher ups there what they're doing for that. Sorry, it's not a better answer.
I've been using 3 bullet points. Number 1, there's less inventory, so there's less competition. Number 2, there's many more searches going on. I know just on the Sotheby's site, the numbers have like quadrupled. And there's no counting of days on any of the sites now. So there really is no down to being on the market. If you're a serious seller, stay on the market and, get some interest, but it will come. I just don't see the advantage of taking it off.
Lisa, we got a couple of questions here. One question is, Noah, appraisals are coming in 20% lower. They are saying that they are pricing it into the market. Have you heard this? I've heard one appraiser mention this to me, and other appraisers tell me that no, they haven't started yet with the declining appraisals, that they're waiting for the comps to come in to show the decline. I guess the other one that was doing it is anticipatory, or is using some kind of real-time information, not closing information. I also had a agent literally tell me, and this is not to plug my site, but I had an amazing story come in for UrbanDigs. And this was an agent who said that she had an in-contract deal. The appraisal came in 10% lower than the purchase price, and that the comps that they used were not even close to being comparable. And they actually went to UrbanDigs. This is a real story, just happened. I couldn't believe it. And they used UrbanDigs and they did a comps analysis on our site with more relevant comps. They sent it to the bank. The bank reviewed the UrbanDigs comps report and actually accepted it and overturned the 10% appraisal and accepted the new appraisal at the price. And the deal is actually now on par to get to close. And I was so excited. I almost grew. I had a few strands of hair growing back over here. I was so excited. This kind of stuff. I gotta tell you, Lisa, I don't, money is not my reward in this business. Okay. This is a labor of love, what I do. So this kind of stuff really gets to me. But look, I think some appraisers do their own business their own way. They're going to start pricing it in. I think others look at closings and they're going to be waiting for that to price it in. It does not surprise me at all that the appraisals are starting to come in low already, just because of the severity and unprecedented nature of this crisis. There's also another question here. Noah, don't you think with large stimulus and low interest rates wouldn't encourage investors to take advantage? Of course, not the ones who lost their jobs. Yeah, and that's going to happen. It's just not happening. It's not happening right now per se. Again, we've only had 328 contracts signed. So
don't forget the other variables like the stock market and people who lost money in the stock market. There's just so many ingredients.
There's a lot of ingredients. We don't know what kind of people got hit, but the people that are buying are those types of people. They're investors. They're thinking about putting in bids 25, 30% off. And I think they're thinking that there's going to be an inflationary wave after this with all the stimulus. It's just that we're in massive deflation right now. There's a big battle, and you got massive deflation on one side, and you got massive stimulus and massive liquidity injections on the other side, and they're battling each other right now. And the Fed is trying to reflate everything. And inflation, there's no inflation now, but there could be inflation 3 years, 4 years, 5 years down the road from all of this in a wave. It could be like a melt up kind of thing, and investors know that, so they're going to go into hard assets. But right now we have to deal with the deflationary side, and the deflationary side overpowers the stimulus future inflation force that's not really here right now. By the way, I just want to mention, guys, we have a forum on UrbanDigs, and we talk about all this kind of stuff all the time. This is a chance for you guys to tap into me, John Walkup. You know, my partner John. He's a brilliant guy, and it's all free. You guys can do this. Just register for free, and if you want to ask us questions, you know, that's where we're doing all those answers on UrbanDigs forum. So there's another venue for you guys to reach out with your unique, specific questions. Cool. I think that's it, Lisa.
All right. Well, we value you. We value your contribution and your information. And for those of you who also value it, we'll be doing this bi-weekly until we can get out of this. And then we'll start doing it monthly so we can see what the numbers are looking on a monthly basis.
Thank you so much.
Again, and look forward to speaking to you in the next couple of weeks when the May numbers come out.
That's right. That's right. Thanks, guys. Stay well. Stay safe. Be well. Bye-bye.